Come on down. You already know what it is. We are back once again with the Hollywood trades. I am here on Cardano. This is for my boy Rowland from the Australian team. I appreciate you for reaching out, good brother. As I was explaining to you, I just wanted to show you. I haven't looked at this chart, and I mean, bro. Last time I traded this chart was probably like a 2-3 years ago, maybe. Maybe. But you said you were looking short on this, so let me go ahead and see if we can provide some of that Hollywood price action here on this chart. Let's see. So we have just gonna take you through on something that you're calling out on me. Calling out to me saying that you were looking at. So take you through how I see things, and let's see if any of this makes sense. All right, I'm gonna remove the background from that because there's on this time frame there's no imbalance. So I only shade gray the ones that are really showing some imbalance inside of the range, but on this time frame there's not. On the lower time frame I'm pretty much sure most of this is an imbalance, which will give us what? Pending short orders that didn't get triggered fully on the way down. That's just how I think about it anyway. So as we run up into that area, of course, it'll be easy to waterfall those orders and pair longs because they'll be sitting there. But at a certain point, you start getting take profits at levels like this, right? And that's why you can't close over that level, right? So they're treating everything above this level as a premium. Are we onto something, guys? So let's go ahead and this is a testing level right now, but I'll call it a sweep. I usually would mark this as a testing level, but because we printed bearish here, I'm going to say that we're no longer testing that level because it's not a bullish candle here. It's a bearish candle, so the next candle should be bearish. At least, again, that's how I think about it. I'm not going to draw the 50% of this block's body because we didn't reach the level yet, but something peculiar as I sometimes will look at is this right here. When applicable, I'll draw equilibrium of this body to see the 25% level is also being used as a premium. I'm not going to keep that there because it's too much noise. We already have this level here. Something peculiar, strange, I always like to see. Also, the fib level of the whole range. I mean, it's not really, again, really messy on the chart, but if you start looking at the fib golden level, right, of this whole range, it is stuff that I look at. I wouldn't keep it on the chart though. So that's pretty much all I would be looking at here is just that body's response. We're expecting a bearish response there. And at some point we're expecting this this imbalance here to be somewhat corrected. I mean, I always expect them to. It's very surprising when they're not, because I always expect them to be corrected in a Fibonacci. Like this is an impulse, right? It broke a break of structure impulse. So this was a technical higher low just by a smidgen than this. Then you got a higher high, then you should get a higher low, but you're talking about weeks, right? So it will take weeks for this higher low in this range. If we do hold this, and we could just trade completely through that because of the force of this. And if the crypto market just decides to go for a market-wide correction, right, or correction or rebalance, I would like to call them sometimes, we could see a trade, to these lows here, which that would be interesting. Would be very interesting. I don't know how to classify this because it didn't grab any of the liquidity here. So there's just a massive level of liquidity. There's just orders, just you can just imagine, right? You can just imagine how many orders are pulled in this what? Relative equal low. When you look at that. So some people might say trade through here. That's hard for me to say because, as I said, high, high, higher, low, higher, high. Could say there's a cause there, but I know CRT candle range type of theory there would pretty much permit us to target this low. When you look at that CRT range, it would permit us to target the low here because it failed to, as I always say, failed to close at one end of the range, target the other end of the range. And that combines with the imbalance theory saying that the market will mostly remain efficient if it can. That's pretty much, I mean, in a nutshell, you could just kind of say that it's looking like what you're talking about is it looks like you know what you're talking about. That's what I'll say. I just got here, so looks like you guys are already on the case. That's pretty much all I have. I wouldn't want to usually go too much further down the rabbit hole if I didn't need to, because you guys are already on it. But I'm gonna do one more thing on camera here because I'm not on this chart, but I like so people know what I'm thinking, and so people know that I'm always on this type of time. BPR entry, CRT exit, and balanced price range entry, right? So if you're short here, you would look for it to balance this price range, and it no longer needs to absorb that imbalance because it already checked that level and grabbed all the pending orders, as I would like to see it anyway, inside of that imbalanced range. Mitigate orders as well out of this here as well. So I would actually, I'm going to actually take this opportunity to go ahead and where we at 7 minutes. That's not bad. I usually like to cut these at around 10 minutes. So what we'll do is we'll say that is a bearish block, right? This whole thing, this is the highest candle, and then it quickly closed below that candle. That's why we like to see a defined reaction at a defined place. Highest candle defined, close below it, right? Boom. You hit that imbalance, and then you expect this whole range to be for them to mitigate longs, which is, I would say, a robotic action right there. High frequency trading algorithms love to sell out of imbalances once it fully corrects that, and then you seek this low again, right? A candle range, the theory is that you fail to close above this range, you would target the low of that range, and that's pretty much what we usually get during these CRT, what I call CRT exit, right? And so, like I said, all of the things, I think people enjoy clarity, I think, of mind, even more so than accuracy sometimes. But when you can also be accurate and you can explain why, that's the accurate thing to think. I think you come to a really good place when it comes to technical analysis. This right here, this is the security block. It closed under that. It closed under this imbalance as well. Not going to mark that, but this line right here will be a resistance now as well because this was an imbalance. I won't mark that because I'm more interested in seeing what happens in this range. Were there enough bears in here to mitigate shorts and like close those shorts and then cause us to close back above this level? That's what I would say why this would happen. You mitigate the orders left in here inside of this short little space here, all of this transaction zone here, and you allow them to come back up just for a smidgen, right? Just for you hit the take profits here. So a lot of the shorts hit take profits there, there. And so with that happening, you can get, I mean, this is, what else? This is just like a small little block. I'm just going to mark that off. I wouldn't want to keep this here. I just wouldn't want to. What I would want to do is clean that up and just give me this, right? This is what I'll call a testing level now still, because we haven't closed bullish yet. So the bears will test that. If we close a bullish candle here, this is still could be tested, but if we close above this, then I would expect it to use this. It's just a consolidation range at that point, until we go ahead and rebalance this little piece of price right here. No, this is a bearish sell side imbalance. And so I would want to see what happens after it rebalances this, because we rebalance this, mitigate, this is the highest. Well, this is the highest candle in the range. So you could very well come back to this level, because this is the highest candle. This is the open of the highest candle. It's a bearish candle. So you could test this level here and test this wick. Sometimes I see that if the highest candle was a bearish candle, then you can sometimes more easily get up here, for whatever reason. I don't know. It's just an observation, but we are at 11 minutes. This is pretty much all I care to have on this chart at this point. Like I said, the deeper you go down the rabbit hole, and I'll say that that's just a reaction level right there. We always look at the lows that exist within like a previous bearish candle. So this is a previous bearish candle below the range, and then I'll look at what lows exist inside of it. They're usually be a pretty good take profit combined with a mitigation somewhere up in there. That's usually what we'll see, and it get a good reaction. And then obviously we're using this low as well as a buy below or a take profit below this low. So it's pretty much what we got right now on here. I expect it to reach for this. I always say what I expect. I expect it to reach for this because that's the nearest imbalance. Do the same. I always expected to do the same little dance with these imbalances, because that's just what I expect. If we're bearish, I expected to rebalance that. Now, if we close over that, it should act as support, and all of these levels should become mitigation levels for shorts trapped, and then we go long again. But that's a few steps ahead. Right now, we exist between this range and this range for me. It's pretty much that. I won't go into the other labyrinth time frames, as I'll call it, but that's pretty much it for me. I hope you guys enjoyed that. Again, Rowland, I appreciate you for reaching out. I'm always down to look at price levels. It's just very simplified process for me.